What is CFD trading? Contracts for difference are over-the-counter, also known as OTC derivative contracts. This means that they are created and traded off-market between parties, rather than on an exchange, such as a stock exchange or futures exchange. CFDs are negotiated and entered into between you on one hand, and your CFD broker as principal on the other hand. Under a CFD, you and your CFD broker each agree to pay the other the difference arising from movements in the value of an underlying product. This is a counterparty relationship, which means that any positions you choose to open with your CFD broker can only be closed out with your CFD broker. Your trading account will either be credited or debited, according to the profit or loss of that trade. CFDs are available for a number of underlying products, including shares, indices, foreign exchange, commodities and bonds. CFDs are generally traded by active traders who take advantage of short to medium-term price fluctuations, with leveraged exposure to the underlying asset and low brokerage rates. Investors can also use CFDs to hedge their portfolio against moves in the underlying asset. For example, a stock investor could enter a short position on a stock CFD to protect individual holdings, or an index CFD to protect against an adverse move in the portfolio as a whole. Let's look at each type of CFD in more detail. Share CFDs allow you to speculate on shares listed on international exchanges. Share CFDs derive their price from real-time fluctuations in the exchange-traded price of the underlying security on which the share CFD is based. For example, if you bought 1,000 share CFDs and the price of the underlying security was quoted as 25.70, 25.71, then the share CFD would have a notional value or contract value of $25,710, being 25.71 x 1,000. Prices for share CFDs are only quoted, and can only be traded during the open market hours of the relevant exchange, on which the underlying security is traded. Open hours of the relevant exchanges are available by viewing the relevant exchange websites. Index CFDs allow you to speculate on the movement of an overall stock market index. Index CFDs derive their price or value from the real-time fluctuations in the value of an underlying index, as calculated by the relevant exchange, or your CFD broker's valuation of that underlying index. For example, if the level of the ASX S&P 200 is 5,000, then trading 10 index CFDs would mean that notional value or contract value of the trade would be $50,000. Similar to share CFDs, prices are only quoted for index CFDs and can only be traded during the open market hours of the relevant exchange on which the underlying index is determined. Open hours of the relevant exchanges are available by viewing the relevant exchange websites. Index CFDs allow you to trade anticipated market trends rather than individual shares or commodities. Most CFD brokers offer index CFDs on the majority of major market indices. Expiring CFDs. You can enter into CFDs over futures on many traded physical commodities, bonds and interest rates. These CFDs are referred to as expiring CFDs. Expiring CFDs derive their value from fluctuations in the value of the relevant underlying commodity, underlying bond or underlying interest rate is calculated by your CFD broker on an intraday basis. Your CFD broker will generally calculate the value of the underlying commodity, underlying bond or underlying interest rate for an expiring CFD by reference to publicly available pricing sources, such as futures markets or cash indices published on the relevant trading platforms. The underlying commodities, underlying bonds or underlying interest rates on which you can enter into an expiring CFD will differ depending on which trading platform or CFD broker you use. Forex. Foreign currency trading, also known as Forex, is actually CFD trading where the underlying instrument is a currency. We cover more about Forex trading under the Forex section of our website. For more information about CFDs, please continue to read our webpage or email support@mytradingadvisor.com for more information. If you are watching this video from YouTube, please visit our website at mytradingadvisor.com. Happy trading!